In this video, I want to talk about how whistleblowers from Citadel and other institutions, hedge funds and market makers will be rewarded massively. I also want to talk about how hedge funds are currently blaming retail investors for their worst loss this year in 2025 since 2021. So stay tuned and let's make some money. Now let's dive straight in with the key information. Quantum Biopharma has announced a cash reward of up to $7 million for proof of market manipulation in its stock. They've said the reward is to be paid if information contributes significant evidence leading to a trial victory or settlement in a landmark $700 million lawsuit. Now, this is another separate lawsuit, not the Northwest Biotherapeutics lawsuit, but the Quantum Biopharma lawsuit. Again, still against multiple hedge funds and market makers like Citadel. Now, before I explain more about this massive whistleblower payment, I wanted to talk about the sponsor of today's video, MCRP, ticker symbol MCRP on the New York Stock Exchange. MCRP is up 34% over the last month, so this is definitely one to keep on your radar for tomorrow. MCRP has recently partnered with NVIDIA to deploy AI-powered patrol robots across urban environments, redefining how cities prioritize safety, infrastructure, and intelligence. They've already secured contracts with the Dubai Police and Emirates Steel, and they're now expanding into Egypt and North Africa. Governments from the US all the way to the GCC are fast-tracking AI-powered patrol systems for border security, crowd management, and infrastructure monitoring, making MCRP a perfect fit. Morgan Stanley predicts that the humanoid robot market alone could reach $5 trillion annually by 2050, with the broader AI robotics sector growing larger and faster, with a CAGR compound annual growth rate of 22.8% through 2030. MCRP already has multiple product offerings for indoor and outdoor use, as well as separate operating systems and control systems as well. So MCRP isn't just an idea on a piece of paper, it's the real deal. So research MCRP today, trading on the New York Stock Exchange under the ticker symbol MCRP. Quantum Biopharma is saying they're committed to protecting their shareholders and the integrity of the markets, and therefore they're offering this massive cash reward. They've said if someone has tried to hire, ask, or pressure you to manipulate our stock, we want to know. So they're going directly after the employees at these hedge funds, institutions, and market makers, because they know the employees are likely to be the ones that have the exact proof, facts, and figures they need. And it's not just a tweet, they actually filed an official filing announcing the cash reward of up to $7 million. This official filing has been filed with the SEC. So Quantum Biopharma are not shy of offering this massive reward, and it wouldn't surprise me if other companies or other CEOs of companies also contribute into this massive reward. So all of a sudden it might go from $7, $10, $15, $20 million in a cash reward to those whistleblowers. On top of that, something very interesting is happening right now with Beyond Meat. Beyond Meat has short interest of 80%, so not over 100%, but a very high short interest. It's got 9 million FTDs, an 800% cost to borrow rate, and it's traded over 1 billion shares of volume today. It's gone from 64 cents on Thursday, Friday, already to over $1.50 per share. Now, there's some speculation here that Citadel themselves are shorting Beyond Meat. They absolutely do have put options, but obviously no one can quantify just how many synthetic shorts they're holding. It could be thousands, it could be millions, it could be billions, or they may not have a synthetic position on Beyond Meat. But it wouldn't surprise me because Beyond Meat was included in the basket of heavily shorted stocks from January 2021. And as I said, it's very interesting when shorts are currently taking their biggest losses in years, and of course, blaming retail investors. This to me seems very reminiscent of 2021. Shorts are taking massive losses. We've got stocks squeezing left, right and centre in the small cap world, many of which trading over 1 billion shares in a single day. It even specifically says that a basket of the 250 stocks most popular with short sellers, that short basket, has surged 57% this year. The other biggest year since 2020, obviously this year is 57%, and the other biggest year since 2020, those stocks surged 85%. So this is word for word proof that shorts are currently the most stressed they've been right now in many, many years. There's also a lot more data that backs that up, like this tweet from Reese's Politics. He said there was 1.1 billion options errors on October 1st, coincidentally, the day prior to needing GameStop shares to be eligible for the GameStop warrant dividend. There's usually a few 100,000 or a few million errors, but of all days for there to be 1.1 billion errors the day before the GameStop warrant dividend eligibility date. So it wouldn't surprise me if this is the reason the AMC institutional ownership is currently the highest it's ever been. I've spoken about this before in recent videos, and don't forget, the institutional ownership didn't drop here in September of 2023, it just reduced as a result of the reverse split. If anything, this institutional ownership has continued higher and higher and higher every single month since January of 2020. Sorry, just realised I said 2020, I meant 2021, but you get the picture. Institutions are continuing to load up on more and more and more AMC shares. And it may be obvious, but you have to ask yourself, why are these institutions buying AMC at all-time low prices when short sellers are more stressed right now than they've ever been, or at least more stressed than they've been in the last 5 years? Now, finally, for today, I wanted to talk about something very interesting indeed, which is that the Federal Reserve recently found that hedge funds in the Cayman Islands likely hold about $1.85 trillion worth of US government bonds, which is 4 times more than what the Treasury Department thought they had. Remember, years ago, Crystal Ball exposed many brokers and institutions with entities in the Cayman Islands. In the Cayman Islands, you don't have to report short positions on stocks that you're holding. And coincidentally, all of these companies, all of these institutions, hedge funds, brokers, market makers, they all have Cayman Island entities, just like Goldman Sachs, Citadel, and many others. And now, all of a sudden, it's being found out that Cayman Island entities are holding 4 times as many stocks, 4 times as many treasuries, 4 times as many shorts as expected. As it says here, it looked like hedge funds had $423 billion of treasuries, but because of rehypothecation and the disappearance of records when it goes overseas, in reality they had around $1.85 trillion. And he says this matters because if a big stock market shock happens and all of these funds try to unwind their trades at once, it would cause major chaos not just in the treasury market but in the stock market as well. And I think when the next major shock happens to the stock market, these hedge funds, these short sellers are going to be in a world of pain. But guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to subscribe to the channel and hit that notification bell so that you don't miss out when I upload a new video. Cheers.